Hello traders, CryptoHead here on Sunday the 1st of May, late afternoon. On Sunday, good time to do a video. But yeah, where are we with Bitcoin? This video, this is a longer video, which I do bi-weekly. I'm gonna discuss the Bitcoin charts longer term. Not like my 3-minute charts, a quick view to what to expect in the next 24 or 48 hours, but looking at some different charting strategies, techniques, and what to expect for Bitcoin and the rest of the market. Further on in this video, I will have a quick look at some altcoins, have a look at the Wu exchange, and I'll introduce you to range trading and show you the basics of that charting technique, which can be very helpful on what I use, especially on lower time frames. But first, let's start with Bitcoin. About 2 weeks ago, I did my previous video. Yeah, well, it was exactly 2 weeks ago. In that video, I said, looks bearish for Bitcoin. I don't really see big reasons for being bullish here, and any bounces should be considered as corrective bounces in a downtrend. And yeah, that's actually what happened. Last video was around here. We did have a bit of a bounce and come down again, another bounce, and another move lower. Late last week we did have a bit of a bounce, which I was thinking it would take out these highs, which it didn't. It's funny because people then call me way too bullish, because well, it was just a corrective move in the downtrend. I wish I could bring this video with more bullish views, but I'm sorry, don't shoot the messenger, but I don't have them. We do have this bearish flag. Everybody's looking at this move as being a bearish flag. This is the downtrend. We do have a corrective move to the upside, and we came down again, and it absolutely looks like breaking down here. If you take out the noise and look at the line chart, you can see that it already broke down. A line chart is working with the close of the corresponding time frame. So in this case, it's the daily chart. If you go to the 4-hour, the line chart will use the close of the 4-hour. But yeah, what to do here? Is it are we really straight down from here? This is what I said, the corrective move, and now make this move. I'm too long in crypto to believe in that it will be that simple. I have seen these moves every time being very tricky to trade, and every time when we did have a rather strong move to the upside, always those full retraces, also like here and like here, on all kinds of time frames. We saw those big retraces, and every time bouncing again. So yeah, in my belief, it's almost too easy to see this move coming, especially in Bitcoin, which is an asset what is pretty easy to manipulate, and the bigger players are always looking for liquidity and using stop hunts, and that's also exactly what we're going to discuss in the range trading thread we'll do later. So when I purely look at Bitcoin, I would say, yeah, it sounds too easy to just go down straight from here. You could say there is a kind of falling wedge forming. Let me have a look. So we do have this as the bottom trend line, and this would be the top trend line. Let's get this one away. And when I look at the RSI, you can also see that we do have bullish divergence in this pattern, which is needed for a falling wedge. So yeah, I think we even have bullish divergence on the daily. Yeah, it's not that clean, but you can see here, while the price is coming down, the RSI is rather flat. But on the 4 hour, we do have a falling wedge and a bullish divergence in the RSI. And are we going to do this, or is I think we at least do something like such a move to the upside, and then probably one more down before we do see a reversal. Then the falling wedge is a typical reversal pattern. I'll show you. So we do have a strong move to the downside, and then you have a sort of consolidation or slowing down in the strength of that move down, and that's how the bullish divergence also is created, is formed. It's caused by the fact that the move to the downside is coming with less power. So sooner or later, normally you would see a breakout to the upside. Now, what happens when the total stock market crashes down? And we know that Bitcoin is following the stock market nowadays very closely. There's very strong correlation. Absolutely. When the S&P 500, Nasdaq, or even and if they keep continuing crashing down, you can forget about this falling wedge. It will have barely any impact, and most likely you even see a break to the downside. But it is interesting enough to show. I would say falling wedges only trading, especially in this kind of tricky market, when you see a breakout to the upside. As said, it could easily do one more down and then start reversing. But yeah, this falling wedge gives a low of 36,000. I do think even if we do get this move to the upside, I do think we have more downside to fear or to worry about in the higher time frames. But on the lower time frames, yeah, I think purely looking at Bitcoin, it would make sense to see some sort of relief bounce. I wouldn't talk about a relief rally, but some relief to the upside would make sense, especially to take out earlier shorts and stop losses. But what I said, if stock market keeps crashing, then I doubt we will see any relief bounce of a significant size. So let's take a look at the S&P 500. As you can see here, I am not, in my opinion, this move to the downside is not done yet. I am not charting this to trade or to make big what's the correct name? Predictions for Bitcoin or for crypto. I'm not a macroeconomics expert, and many of us in crypto aren't. So I don't do the same as many others and make big studies of S&P 500. I just see for now, I do see a very standard correction after such a big move to the upside. It would be a bit bigger correction than we have seen for a long time. Although, yeah, we did have here one around the corona, but I'm looking more like a correction like this, and that would be here ABC, and that would mean that very basic, I do think we should see more upside, downside in S&P 500 in the stock market. Let's say it like that, and that is also giving pressure to Bitcoin. On the other hand, what we do also see is that the stock market is it almost feels like it's performing worse than Bitcoin. We still see a lot of buying and also selling absorption. This is Coinbase, and these flags, these clouds is passive buying. There are constantly these yellow flags, which is a sign for imbalance in the order book, which often leads to a move to the opposite side. Green is more or less buying support, and you can see that it is constantly around at Coinbase. Other exchanges not that good at the moment, but constantly there is buying support at Coinbase, and almost every week we see those tweets coming by that another few thousand Bitcoin is removed from Coinbase to an unknown wallet. So absolutely, their whales or long-term holders are buying. They do have a much different horizon as we have. They are buying long term, but yeah, absolutely, I am convinced there is already now a lot of buying support, and that we are in a reaccumulation for Bitcoin. It's only the question how deep we go before we finally turn and can be bullish again. A quick look at the dollar. Dollar reached a very high level, which hasn't been seen since, this is 2016, but then you go back to around 2002. Would this mean that we start reversing? I don't think so. I saw a lot of a couple of other traders mentioning this would be the turnaround, and that we would go down from there because it was a big resistance and a liquidity grab. I don't believe so. You can see on the daily, we had one day, I think last Friday, that we did start coming down. But when I look at the 4-hour chart, for now, I don't see a really big reason to be very bearish here, and this looks to me way more like a corrective move to the downside, and you can see it already made here a higher low. Could even do a corrective bounce now, 1, 2, 3, and then make an A, B, C. It's still, for me, no reason to become very bearish on the dollar and the current market. I do think the dollar could easily see way more upside than just coming down from this line. I think this move down is just short term. When I look at my other charts in Bitcoin, let me go back to the daily. This is support resistance chart I am using. Over the weekend we came down to 37,400 more or less, and playing in the range the past week between 40,600 and now 37,400. Yeah, absolutely now getting tricky. Do we break down to the downside in the coming days? Then with a bearish retest, then my next target would be 30,000. Because of this, and also maybe because of that falling wedge I showed, now bouncing here from this support level, coming days I wouldn't be surprised to see a move back to 40,600, and then maybe that move. Only above 40,600, a clean reclaim of 40,600, then I would expect maybe a continuation of this this pattern, which I showed you at first. But yeah, first we need to tackle 40,600. And earlier in the week we traded that range, and I was already earlier in the week looking for this one to take out these shorts. Let me explain that different. This was the last swing high, and it came down, so you had a bounce here. So it's very logical to expect that a lot of traders have their stops below, just above this level, and that's why I was expecting earlier in the past week a move to take out these stops and then come down again. It even didn't make it, although it came very close. It ended up here in that supply zone and already came down. Quite a surprise. I was looking here for a corrective bounce in the bigger downtrend, but it even didn't make it that high, which was also because on Friday equities were selling off quite hard. And after all, Bitcoin didn't even follow that strong. So with this bounce from support, I wouldn't be surprised if we do see this move. When we break 39,000, I do think we still get a stop hunt for those levels. But then still be aware for more downside. When I look at my Elliott wave chart, let me start with the 4 hour. I didn't update this one. I do have from the 48,000 top in March, I do have a bearish count to the downside, and I'll come to the higher time frame after this, but there is something to discuss for that, because there's an alternative. This one actually made this move. This was my chart from last Friday for the group. So we did have that bounce here, and now coming down, and I do think it looks to me like we are doing this 1, 2, 3, 4, 5. We are now in that white 3, and in that white 3 we are doing the blue cycle, which is 1, 2, and now in blue 3, and this is 1, 2, 3, 4, 5. Leading to somewhere around 33,000, lower 33, higher 32,000 for a bit of a bounce, and then lower again with a target around 30,000. And when I look at my daily chart, that's the target. But I wanted to show you something else. This week I saw a different Elliott wave count, which I didn't consider for the past months, but it is considering that the move to the upside to 64,065 last year was the end of leg number 3. Then we saw a big correction, but this is considering that we are still in that correction and doing a running flat. Although you make a new high here, it is not a next bullish cycle. It's just part of a correction, which is going to here, and then we would have already started a new bullish trend. It is possible, but we only need a fifth leg to the upside here. So we do have 1, 2, 3. Here internal I can count also 5 legs, 5 sub legs. So it is absolutely possible that we are doing here a 1, 2, 3, 4, 5 down, and now up. And if we make a fifth leg, we would have a leading diagonal to be followed by another correction, and then a stronger impulsive move to the upside. But yeah, you can see it looks more like we are heading down, or we are having here a gigantic bear trap, and we start going to the upside very soon. But yeah, most charts and also the sentiment in the market and also the stock market is leaning more towards more downside. So this would be invalidated if we go below here 4. One reason for me to think I'm not this is not a running flat, so this is not this one, but a running flat does have 1, 2, 3, 1, 2, 3, 1, 2, 3, and I do think this move here to the upside is much more like a 1, 2, 3, 4, 5, or even 1, 2, 3, 4, 5. You could say, yeah, this is 1, 2, 3, but that's the problem with Elliott wave. You can always find something, a pattern what fits your bias. What speaks for this being a correction, and now next thing is that move to the fifth leg, is the fact that the correction here was much stronger in my feeling, and this is taking much longer, and you could say this was the correction only in 3 legs, and otherwise it should have been 5, and after 5 legs to the upside, you expect a big strong correction. But there wasn't. Well, of course, we did have a big move down, but not if you consider that whole move from 3,500 in 2020 all the way up to this 5. Then you would expect something like a blow off top, and then lots of more profit taking, and you would expect something like this, and that's not happening. So that is one of the reasons to think that for me to think that it does make sense that this is just a correction, and then followed by that next impulsive move to the upside. But yeah, what I said, we need a 5th leg to the upside here, and it doesn't look like we will get that. It's not because of purely crypto. If Bitcoin would be not so correlated to the stock market, I would say, oh, we have a big chance Bitcoin is starting to go up from here. But yeah, looking at the stock markets, I don't see it happening, that we do have a short-term reversal and big moves to the upside. So any bounces, to summarize for Bitcoin, any bounces in the coming weeks, I'm still considering it to be corrective bounces, just like 2 weeks ago. And yeah, more downside confirmed when we break 37,000, and then next target for me would be 30,000. It is in line with what I see in Elliott wave, but Elliott wave you can always find lots of alternatives. The alternative I showed you, but that has still a long way to go and needs to make a 5th leg. So that is what I wanted to tell you about Bitcoin. Ether, the same. We do have that big downtrend. We have a corrective bounce, and now another move to the downside. Bitcoin to 30,000 would mean Ether towards 2,300, 2,200, and doing more or less the same move to the downside. 1, 2, 3, 4, 5. Not much else to add here. It has a little bit of a different Elliott wave labeling, because well, here you can see, and this is also what I often do. Remember what I said about that move in Bitcoin? Was it 5 legs or 3 legs for that running flat? In Ether, you can see, I think it's much cleaner a 5 legs structure, where Bitcoin did look more like, you could also say it was a 3 legs move. So Bitcoin was more like this, where Ether is, in my opinion, much cleaner, a 5 leg structure. And I always compare them, and when one of them is not that clean, I check the other, and it often gives me enough information to have also a bit more clarity for the other one. A quick look at some altcoins. Well, I'm not gonna check all or any specific altcoins. I'm just looking at some baskets at FTX. They have altperp, DeFi perp, shit perp, and that already says a lot. I do use them a lot in my daily analysis, and all have the same structure in the dollar pairs. What I showed you in Ether and in Bitcoin, whereas Bitcoin did have here a new high, but if those ABCs play out, that would be Bitcoin to 30,000. Then easily these altcoins do another 30% at least to the downside. This is the problem what many altcoins have. It is even much stronger in some altcoins. We did have a big run up, consolidation, and now probably downside, and same structure here, and here bouncing. Well, found it is at support, and now has to be seen if there is some bounce, which would make sense to see some relief bounce, but yeah, I would say short term it is only considered to be a corrective bounce. Shitcoins are even worse. Yeah, that's why they called shitcoins. But here also you have that big run up, and you will find this in many of the altcoins if you look solely at them. And this ABC is also saying it should go there. This one lost already that level, so likely to see that move next in the coming weeks, and that would be also easily 30% more to the downside. I forgot one chart for Bitcoin I wanted to share with you. It is the In Silico indicator. You can find that on insilicoresearch.com. Bitcoin on the daily. I'm using this indicator just for confluence in my own charts. This chart is where you have to look at is at the upper and lower zones to find reversal areas, and on the daily you can see that just last week we did have here a bearish sell signal. There was a short-lived buy signal, and red candles. Yeah, here you see it's far from being on the bottom, and you want to see, you want to be somewhere over here, and then expect a bounce with a significant move to the upside. So absolutely not bullish here. Also still trending to the downside, red candles, and here is no reason to think the bottom is in. If I look at the 4 hour, do I see something new? Yeah, well, over the weekend there was a reversal candle, the blue one. We do bounce here a bit, and yeah, it's what I said. Could be a short-lived bounce before most likely more downside. next thing I wanted to discuss. Oh wait, we do have a chart for Woo also, and then we go to also to Woo. When looking at all altcoins, then we can also look at Woo. Woo did have a big run from here last year, even to 180. I think it was on a hair. I missed them at times 20 because we stepped in pretty low. But this is more or less what I'm already having since January, February, that I'm saying that it could see a move lower towards lower 20 cents, 24, 25. And that is in line with Bitcoin to 30,000, Ether to 2,200, and all the altcoins also making a much bigger move to the downside. And that's where I definitely want to pick up again Woo. I do have Woo in my wallet, but it's for staking on Woo. This is this is my demo account. This is the Woo platform, which I cannot show you completely because I am. I cannot change it because I changed my window for screen recording. But Woo. If you the big advantage of Woo is, of course, fee-less trading and very deep liquidity, the best liquidity in crypto. This is my order panel, a trading panel where you can add lots of widgets. This is for Ether, depth. You can ladder your buys with all kinds of widgets, funding rates. It's all, you can put it in one screen. Positions, so fully customizable to your own needs. You can build your own layout, or just choose when you log in for a standard layout. If you start trading on Woo, I would suggest or advise to use my referral link in it's mentioned in the description. I do get commission for your trading, but I'm sharing it 50-50 with you again. Pretty unique. I don't see doing it anyone else in crypto, and I am on the highest tier for staking, and that gives you the highest reward for, I do get the highest reward for referral fees. But I'm sharing it with you. You need to stake 1,800 Woo to have fee-less trading. And I just showed you that there is a good chance that it's not that much. It's not even $1,000. Then you can have feeless trading, what can save you a lot of money every month, especially if you are trading some size. Then it goes very rapidly. You should check your trading fees on the current exchange, and you will be very much surprised. So far, Woo exchange, and I also wanted to talk with you about range trading. And let me show you an example. This is a range in Bitcoin, which I'm using. Why range trading? The trading Bitcoin is more and more turning into a I hope this works. Full screen. Oh. And most of it will be on. Trading Bitcoin is much more and more a liquidity game. And I was at the end. it's mentioned here, trading Bitcoin has more and more become a liquidity game. Bigger players are always on the outlook for liquidity. Imagine if you are a whale and you want to fill a big position, let's say 1,000 Bitcoin for a move to the upside, you're not going to market buy, because that would only drive the price up. So what you are trying to do is, if you want to go long, that you push down the price below or to the zones where you expect liquidity. Very often that liquidity pool is below the previous low. Right now Bitcoin is pumping. That's always nice to see. It's not, it's $300 move, but it looks nice after such a sideways weekend. Liquidity pools are very often below the previous low, because many retail traders do have their stop losses there, and that's exactly where whales can fill their positions. They push the price down. Your stop loss is being triggered. If you are long, then your stop loss is creating a sell order, and you are selling right into the bits of a whale. Stop hunting is it called. I will give you a very brief, very short explanation, just the basics about range trading. I'm using it every day because it is happening more and more, and it's also quite easy to use. It's a very simple method, but works very nicely, especially on lower time frames. Gives me good entries very often. And what I said, I'm just showing you the basics, and I will this document, I will make it available on our website. But what I said, we use it every day. These are some screenshots from my training I created for our group already 2 years ago. Just some snapshots, but stuff like how to trade and how to enter. It's not in this because I wanted to keep this video a bit shorter. Previous video I thought was way too long. So just the basics, and if you want to know more about this kind of trading or any other trading strategy, then you are more than welcome to join our group. So if you look at normally a chart, you would see like here a bearish flag. You can also see here, by the way, this is from 2020. It's already a while ago. But like here, there is just a bearish flag on the chart, and you are waiting for a break down or a break to the upside. But if you this is on the 4-hour chart. If you would go to the 1-hour chart and use range and you mark the range out, then you suddenly have way more information in the same chart, where you do have here a range low. I do hope now that my cursor is visible. I do not have an annotation tool available, but I'm right now at the left side of the screen where the bottom line starts. That's your range low. The range high is the upper trend line. And here at the beginning you already see a sweep of the lows. We go up, we form the range high. We have a sweep of the highs, another sweep of the highs after touching the range mid, and we bounce again. We make a lower high and then come down to come up again, a swing failure pattern. Here was a swing failure pattern, and then we come down to sweep the lows. This I'm now at this blue sweep lows at, let's say, the date the 3rd, and you can see that this pin bar down takes out the lows on the left side. So it hunted those who had their stops below the first low. Just study this in your own time, and then you will recognize when I talk about sweep of the highs or taking out the highs, what I mean. On the right side of the screen, you also see very nice. You do have here around the 9th. There is another high and taking out the previous highs. Then the price comes back down in the range. There is a retest of the range high. It's being rejected, and then you see a a big move to the downside with a big pin bar, and again taking out the previous lows. Everybody who was long from the mid, let's say the 3rd or the 4th, most likely had their stops right under this cluster, and they were taken out here. So how to determine a range, how to identify. There are several ways to do this. You can do it right after an impulsive move. Consider the white lines are the price action, normally the candles. On the left side, you have first, after the impulsive move, you take the first low as range low and the highest price after a reversal as a range high. So when you see the price coming down strongly, then bounce, then you have your first range low, and then the first the first reversal is your range high. And if we go to the right side, there is the other side. This is in an upward movement. After the impulsive move, you take the first high, so where the impulsive move to the upside ended. And then you do have a swing low, and that is your range low. Going quickly, study this afterwards when you can download this file, and then you can study it in your own time and in your own speed. Here are some live examples. Range high, range low. The first we had the impulsive move and formed the range, and then you can see here in the mid that there was a sweep of the highs, taking out those who were short with this move. So this is actually a very good example. People saw retail saw a strong move to the upside, going sideways. They are going short. They do have their stops above this first range high, and they are taken out with this pin bar. The pin bar is closing, it's a swing failure pattern actually, is closing back in the range. There is a retest of the range high, it fails, it comes down, it tests the range mid, and breaks the range mid, then a retest of the range mid. It's a bearish retest because it's being rejected, and it's coming down. And then again you see a break of the range low, a bearish retest of the range low, which is a bad sign, and then you can also see it's coming down. On the right side we have a similar move, but then for a downtrend. You have a strong move to the downside, forming the range low. There is the first high is your range high. You immediately see a pin bar to the downside, a swing failure pattern, taking out the previous lows, coming up. Those people who are short, they have their stops above the range high, and they are being taken out in these swing failure patterns. The price closes back in the range, falls back to the range mid, breaks range mid, retests range mid, breaks down the range low, retests the range low, and is continuing to the downside. Second way how to determine a impulsive move, a range, is when after the impulsive move, the first high or the first low is already swept. That means the impulsive move down happened and the first low is already swept. So you have to. I'm on the left side. Yeah, I'm worried you cannot see my my cursor, but you have a move to the downside. Already bounced and have a high, which is your range high, and then it already took out the lows. But you can still trade this perfectly because you can enter on a retest of the range low. On the right side, it happens also in the up move. You have the range high, you have a range low. The range high is already taken out, and then you can try to trade the move to the downside, and most likely that will end up in a move towards the range low and possibly taking out the range low and hunt your stops. Well, this is another example when the first low or the first high is not swept yet. Read it in your own time, and it will make a lot of sense to you. Some live examples where you can again see the fuckery which is happening a lot nowadays in crypto with those traps and those stop hunts. And if you didn't use range trading or this kind of range trading where the liquidity is, then and if you start using it, you will be surprised how often these liquidity hunts happen. It happens on every time frame, and it will certainly help you in your trading. That being said, I want to stop here. It's beautiful weather outside, but it's also that my video is long enough for this Sunday. It's now Sunday, yeah, and on Monday I will be back with a shorter video, 3 minutes Bitcoin, and I hope you liked this one. If so, please give a like or subscribe, and I wish you all happy trading, although the markets are not really great, but I hope I will be back with some more bullish news and bullish charts in the near future. Thank you for watching and have a nice day. Bye bye.